Hello friends, in our last video, we had tried to share our view with respect to the market and expiry, but we had given a due caution as well that on account of an expiry, we may see unnecessary zigzags, but somehow momentum was smooth on the downside and option writers got into some panic as well if they had chosen a wrong side. In fact, it was really a good option buyers expiry as a whole, those who understood the momentum correctly for Nifty. For Bank Nifty, some zigzag was also seen, but for Nifty, it was a crystal clear smooth on the downside right from the first tick. Now, if we see high and low difference, then again it is giving a high range and which can be considered as a volatility or both side moves cannot be ruled out. Range for today's trading session is more than 270 points. In fact, it is not 270 points or so, which again reflects a high momentum and a volatile market, as well as if at all trend is identified correctly, it may go on the one-sided move. Now let us try to understand the chartical view. As per the chart, still there are chances that we may see some bounce back. This is 15-minute chart with 100 and 200 SMA. 100 SMA is been broken convincingly, but still we can expect some minor zigzag or continuation in the downtrend in the coming trading session. At present, if we talk about 200 SMA, then it is coming near to 17,360 to 17,370 zone as a whole, which may act as a support going forward. RSI at present is in oversold zone, so somewhat either adjustment or some bounce back cannot be ruled out as per this. Now if we see daily chart, then on daily chart, golden Fibonacci ratio acted as a perfect resistance and overconfident bulls got butchered today. Practically it makes no sense to use 100 and 200 SMA on this chart, so I have removed it. And looking at this structure, we can change our swing as a whole and we need to find out now supports, as today's candlestick structure is almost kind of a bearish engulfing. It is not exactly, but to a certain extent. And if we try to connect swings, then we can say that somehow our first Fibonacci ratio of 23.6 also got broken and next level comes at 17,425. So somehow bulls will try their level best to save this level as a whole and we may see this kind of a movement. But if at all bulls fail to stop bearish momentum at 17,425 or nearby levels, then we can see 17,310 or near about levels in next 2-3 trading sessions as a whole. At present, if we talk about RSI for this structure, then RSI as a whole has given a reversal from near 255 levels, which is a neutral zone, and RSI may not give us a true and fair picture. Just to have a confirmation, we can use 1 hour chart as a whole, and in this we are able to see that a negative crossover has already taken a place and now probably bears may continue on the downside. But at present one should focus on 17,500 as a strong support and thereafter only we can see more downside. Somehow we are expecting some zigzag or small bounce up to the level of 17,630 or so. It all depends what is a chart structure at that level point of time and next course of action. Now let us try to check out what is the option chain data. This is an option chain data for next series as a whole, and we can see that highest OI is at 17,000. That means support is bit far. But if we see 18,500 and 18,000, then strong resistance are there. That is because of a upside momentum. Call writers have entered on a CE side upfrontly because of a high premium. Now if we see again data structure on the lower strike prices, then 17,500, 16,000 and all are having a comparatively lesser OI, which may not act as a strong resistance going forward. But somehow if we see the structure overall, then 17,500, 18,500, 18,000 and 17,800, especially 17,800 should be focused, and high chances are there that we may see momentum getting on the downside, as this level may act as a resistance as a whole for the entire next weekly expiry. Max Pain is not going to give you a clear data, so frankly speaking it is not of any sense. Comparatively, if we talk about PCR data, then PCR at present as per the OI is kind of a oversold, but that should not be considered to a higher extent. The reason being actual or aggressive trading yet to take place in this series. If we talk about PCR on a volume basis, then yes, somehow we can say that comparatively still put writers are not that aggressive, as we are looking for a call writers. Whole and soul overall, if we talk about next trading session, then 17,600 to 17,650 may act as a strong resistance going forward. On the downside, doors are open till 17,425 to 17,400 levels as a whole. We hope this video is going to help you to prepare your trade plan and trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.